Good morning. It's 11 a.m. in New York City on Tuesday, the 14th of February, Valentine's Day. Saint Valentino was a 3rd century bishop or clergyman in Rome or in Italy at the time of the Roman Empire. And he took care of early Christians who were persecuted, for which he was, in fact, executed himself. Became the patron saint of courtly love in the medieval ages. And he's also the patron saint, at least in the Western Christian Church, of epilepsy and beekeepers. I'm not sure that there's any correlation there, but those of you who follow the subject know that locally produced honey tends to be good for combating allergies. Something that Big Pharma has threatened to sue me over if I told you. Don't think it has any help for epilepsy, unfortunately. Wanted to talk about gold and inflation today. The U.S. Consumer Price Index data for January 2023 came out this morning, and everybody's looking at it. It is important. Inflation on a long-term basis is important to gold and silver and everything else in the world. It's probably not as important as some people in financial markets make it out to be. And it also is something, in December I had a really nice weekend with a couple long-time friends who happen to be retired economists. And one of them made the point, people think of inflation as something. It's not. Inflation is a phenomenon that is caused by a multitude of things. I think there's probably a little bit too much emphasis on it. I'll talk about that in a few minutes. But let's first look at the January data. January, on a month-to-month basis, the inflation figures were higher than they have been really for about 6 months. That was expected, and it was well publicized within financial markets. Most of the stronger price increases were food and energy, both of which are very volatile and both of which are tend to be strong in the wintertime for obvious reasons. Services in the category of non-food and energy price increases, services were very high. I think services were about 7.2%. And transportation services were up 14.6%, which is problematic. Commodities, less food and energy. So not so much the services, but the things that people were buying were only up 1.4%. So the price pressures on things have come off from 2021, but the price pressures of services have actually come up. And that's where we are right now with inflation. On a year-over-year basis, which is what a lot of people look at, headline inflation was about 6.4%. That was a little bit lower than in December, and it continues the downward trend that we've seen since the middle of 2022. And if you take out the food and energy, it was about 5.6%. So the trend of decelerating inflation continues. It continues to moderate, as we have said you should expect. And the overall rate is higher than we'd like to see, a little bit higher than some people expected, and a little bit lower than other people expected. But the trend continues toward deceleration of the inflation. Inflation is still very much problematic. Now, taking a step back, as I said, I think some people overemphasize inflation, and I'll make fun of some in a minute. These are the long-term correlations between changes in monthly gold prices and changes in the inflation, apples to apples. And you can see from 1970 through 2021, this is from our 2022 Gold Year book. We haven't updated the table. We've updated the data. but I grabbed a table from last year's gold yearbook. This year's gold yearbook will come out in March. Our crew is working on producing the gold yearbook right now, very diligently and furiously. But so this is through 2021. Over the long haul, the relationship between gold and U.S. inflation, U.S. consumer inflation, has been 9%. It's not very high. There are people who will tell you that all you need to know about gold is inflation, that gold solely responds to inflation, but that's not really the case. You can look at this, and we've broken it down into different periods of time. 1970 to 1990, 9% correlation. 1978 to 1982, that sweet spot, some people say, when inflation went skyrocketing up as high as 14%, and gold went from $200 to $850, and then back to $300. 5% correlation. 1990 to 2021, negative 4%. And we've talked about this in the past, and we'll talk about it in the future. And some people will understand it, and some people will choose to ignore it, either because they don't understand it or because it runs afoul of their deeply held beliefs. This is a chart showing you on a quarterly basis, and again, it's from our gold yearbook last year, inflation and the gold price. And as I just mentioned, and I'll show you again, negative 4% from 1990 to 2021. That's this period here when inflation actually was low and flat and actually slightly declining, to the point where after 2008, some economists, including economists at the Fed, were saying, oh, it's too low. Inflation was not a problem for 30 years there until 2021 in the post-lockdown recovery period. But gold prices, well, they moved flat, slightly lower from 1990 to 2000. And then from 2000 to 2011, they went from $270 on an annual average basis, about $250 on a intraday low or a settlement price low in 2000, 2001, to $1,100, $1,900 an ounce. Came back down and went back up. So you had this long period of time when gold prices rose more than tenfold, and it wasn't because of inflation. And I think you really need to bear that in mind when you think about, what do I think about the gold price? We have spoken ad nauseum for 40 years about how gold responds to uncertainties and issues. I learned many years ago at a place I worked at before CPM Group that you don't talk about problems, you talk about issues. Gold, investors buy gold when they're concerned about stuff. And it could be inflation, it could be currency market devaluation, it could be political unrest at home, it could be international political problems, it could be hostage situations or invasions by the Soviet Union into Afghanistan, or Russia into Ukraine. It could be assets being frozen by the major industrialized countries to punish the Iranians for overthrowing the Shah, or the Soviets for invading Afghanistan. It could be any number of things, or some combination of things, that cause investors to buy gold. Inflation is just one of them, as is currency deterioration. Now, over the weekend, I got to listen to one of the carnival barkers who touts gold and silver. And it was very interesting because his entire presentation was, when somebody knows that what they're saying is not true and they're trying to convince people, the tone of their voice, the frequency of their voice tends to go higher, and then they tend to speak louder. Like, if I speak loud enough, maybe you'll believe me. And it was very interesting because, he started off by saying, hey, the Fed and the Treasury cannot control the deficits and the debt situation. And all of this house of cards built on debt is going to collapse. And people will starve to death because they won't even be able to find food. Now, first off, we have to stop and point out the Treasury and the Fed don't control the deficits. That's the Congress and the administration. Treasury has something to do with the administration, obviously, but the deficit really comes from the White House and Congress. The Treasury and the Fed are charged with trying to deal with the consequences of bad governance on a financial levels. So I guess he's right that the Treasury and the Fed can't really control the deficit or the debt, but that doesn't mean that they can't manage it. And they have been managing it all too well since the 1970s. And some people, this guy only been in the business for a couple decades, but some people, I know one guy in particular, who has been warning about this since the late 1960s, when Richard Nixon famously defamed John Maynard Keynes and said, I am a Keynesian and we can run a deficit, and really started the long-term period of deficit. I pointed it out before, I'll point it out again. In 1980, Ronald Reagan ran on a platform that included the statement that the country could not sustain a $58 billion annual fiscal deficit, which it was running under Jimmy Carter, and that the debt was getting close to $1 trillion, which was unsupportable. That was 1980. We're in 2023. The debt is $33 trillion. The deficit is $1.3 trillion. And it hasn't fallen apart yet. Now, in defense of the economy, Ronald Reagan also said in 1964 that Social Security was about to go bankrupt. So maybe he wasn't a great economist or a particularly honest politician. But find me an honest politician. Anyway, this guy was going on. And he said, the world's going to collapse. The Treasury and the Fed, they can't manage this debt. They can't manage these deficits. And that's going to cause all kinds of collapse of the financial system. And you've got to be in gold and silver. And he was saying it in his high, whiny voice. And then he said, now, okay, I've been saying this for 20 years, so I've been a bit early. Yeah, a bit early, 20 years. Yeah. And then he went on to say, inflation is, in fact, a real problem. People don't realize that inflation is a problem because they think inflation means high and rising prices. But inflation means something else. And then he redefined inflation. Yeah, and the reality is that inflation is, in fact, high and rising prices. And part and parcel with the nonsense that we hear on the two extremes politically and the various governments internationally and the various weird stuff socially, you also are finding in the precious metals market, this is nothing new, that when somebody's been wrong for 20 years or 30 years or even 2 years, what he wants to do is redefine stuff. Okay, I've been wrong on inflation, he said. He didn't say it, but what he meant to say is, I've been wrong on inflation, but if I can convince you that I can redefine inflation as something other than what inflation is, then you'll see I've been right and you've been wrong. It's pathetic. The reality is that inflation is a problem. It's a problem that's being dealt with ever so slowly. It continues to be a problem. There are all sorts of things that are happening. Inflation is not a thing. It's not a creature from Jekyll Island or any place else. Inflation is the result of various things that happen in the real economy and in the fiscal and monetary realms. For example, avian flu, which has caused the United States to cull its chicken stocks by billions of chickens, which has led egg prices to go from $3 a dozen to $8 a dozen. Yeah, that shows up in inflation. And I will point out again The U.S. CPI is calculated on a monthly basis by the Bureau of Labor Statistics, which has thousands of American citizens who voluntarily fill out ledgers every day and turn them in on a monthly basis saying, this is what I bought last month and this is what I paid for it. So when you hear these carnival barkers talking about how inflation doesn't really measure what people are buying and spending their money on, send them to the Bureau of Labor Statistics and they can read the 42-page report every month and see exactly what it is. And you can do it. You can go to the Bureau of Labor Statistics website. You can download the monthly CPI report. And it's like, let's say it's 42 pages long. The text and the charts I showed you earlier are 2 or 3 pages. And then the rest is line by line. Apparel. What types of apparel? Yeah. Medical care. What types of medical care? And then there's this whole thing with shelter. And there, hear these people say, well, it doesn't really measure mortgages. That's right, because mortgages are actually a capital expenditure as opposed to a current expenditure. What it measures is the cost of having shelter. And part of that is rent, and part of that is mortgage payments, and part of that is your taxes and utilities, and part of it is other expenses related to shelter on a current account basis. And you can read the book. It's not that difficult. Like I said, most of it's tables, and it's fascinating reading if you really want, because you can see the changes in prices of all sorts of things over like 40 some odd pages. And then you'll know what inflation is. And when a carnival barker says that you're wrong to think that inflation has to do with rising prices, you'll know he's wrong. Let's talk a little bit about gold and silver. Gold and silver came down in the second and third quarters through October. They started rising in November. They rose a little bit further. Gold rose more strongly in January than silver did, but silver had risen more strongly in percentage terms in November and December than gold had. So gold was actually kind of playing catch up with silver to some extent in January. They have plateaued since then. CPM Group, on our short-term trade recommendations that we provide to our clients, we a couple of weeks ago said, okay, the prices have risen. Let's stand aside because we think there's a lot of uncertainty and a lot of volatility, and we don't necessarily see a strong impetus to say, yeah, prices are more likely to rise over the next week or two, or prices are more likely to fall over the week or two. We had tagged it among ourselves. We talk every day among ourselves about the state of the markets and what we think about prices. We had said, let's wait until after the CPI comes out on Valentine's Day, and then we'll figure out what we're going to see. And the whole world seems to be doing that. If you look at what's going on, 2 biggest markets for gold and silver, India and China. In both places, what you're seeing is that demand has been relatively weak over the second and third quarters of 2022. Demand started to pick up over the last 3 months, and it's lukewarm. Demand is rising, but it's not rising at a very sharp pace. You've got a Goldilocks economy, and you've got a Goldilocks gold and silver markets. And that gold, it's not too hot, it's not too cold. There's no compelling reason to think that the prices will fall sharply. There's no compelling reason to think the prices will rise sharply, at least for the next week or two. That will change at some point, and hopefully we'll have the prescience of mind to say, hey, I think it's time. And we'll be talking later today and tomorrow among ourselves at CPM Group to see if we think that maybe it's time to issue a buy or a sell short-term recommendation. On a long-term basis, yes, we're still bullish, but we think that the Goldilocks economy and the Goldilocks precious metals markets can sustain themselves for a little bit longer. That's all I have for today. Take care of yourselves, take care of people around you, try to do something for the world, because If everybody does a little bit of good stuff for the world, maybe we'll be in a better place. I'll talk to you on Friday.